Hello students, welcome to my classes. My name is Dr.ANju Pramod Dubey, and today I'm going to take up the topic Introduction to Accounting, wherein we are going to learn about definition of accounting, advantages of accounting, limitations or disadvantages of accounting, and finally we are going to cover up the differences between bookkeeping and accounting. Why basically I want to tell you that every student of accountancy, they need to have information, or they need to have learning about these concepts, because they are the basics or ABCs of accounting. So now, as I told you, these are the four topics that we are going to, subtopics that we are going to cover up in today's class. So it will be introduction to accounting, where I'll be taking up the definition, and then we'll be covering up advantages, then limitations, and finally the difference between bookkeeping and accounting. So here we start with our first subtopic, that is definition of accounting. So over here, if you can we can see that the definition of accounting, it's properly given as it's an art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. So in this definition, we need to stress out certain we need to stress on certain keywords, and those basic words are like, you have these definition, and so students, we can see certain underlined words. These are the key words that you all need to specifically highlight when you write your answers in your board exams, you or your final exams or tests. You must specifically underline these words or highlight these words, because these are the key terminologies that are being looked out when examiners check your answer sheets, and they do look out for these specific keywords in answers. So, and these underlined keywords, they are helpful for you in remembering the definition as well for accounting. So the first keyword that you have over here is, it's an art of accounting. Accounting is, it's an art. So when I say it's an art, means it depends upon the individual's skills and abilities. So here, um, skills and abilities matter. Okay, then the next thing is classifying. Here we do a kind of classification. Like, you try and understand, when I say classification, means similar activities are put under one category, and the other, you try to divide the activities, or you try to divide the transactions on the basis of their nature. So all transactions or all activities relating to sales will be classified under sales account. Then all transactions or activities related to purchases will be going under purchases account. So like that, you try to divide the activities under various headings, and those headings are mainly your different types of accounts. Then at the end of the accounting period, what you do is summarizing. So when I say summarizing, what you try to do is, you try to summarize or kind of create snapshot, that whatever transactions that have taken place during an accounting period, what is the net output, what is the net result. So you get to know that, at the end of year, how much is your sales, or at the end of year, how much is your purchases, what is the value of your creditors, what is the value of your debtors, etc. So that snapshot is done through a statement called as trial balance. Okay, in that trial balance, whatever accounts we have maintained for the whole year, at at the end of the year, whatever is the balance remaining in each account, we'll be writing under trial balance, and that's a kind of summarizing. Okay, and then it should be in a significant manner, it should be in a proper manner. There is an order for doing all of these activities, so we have to follow that manner, we have to follow that sequence. In terms of money, this is one of the important things, that whatever transactions we are writing, we need to mention them in terms of rupees or in terms of dollars, whichever currency we are using as our denomination, or whichever country we are residing, whatever is the currency of that country, we are going to write those uh, values or transactions in terms of money. Then transactions and events. When I say transactions and events, so transaction basically means here kind of exchange is taking place between two parties. So transactions and events, when I say, so in case of sales and buying, in case of sales, one party is the buyer and the other one is the seller. So over here there is an exchange that is taking place of goods and services and money. So all the transactions wherever money is involved, you're going to write them in monetary terms, and those transactions should be at least in part of financial character. When I say at least in part of financial character, means that those transactions should have monetary value in when they happen. So let me give you an example. Like if the HR appoints an employee, for the appointment of employee, there is no financial transaction. Okay, that's a kind of appointment of employee. But financial transaction involves money. Here no money is involved right now. When at the end of the month employees paid the salary, that will be a financial character transaction. But when the appointment takes place, it is not a financial character transaction. However, we take up one more example, like when we sell goods. In those cases, if we are selling the entire goods on cash basis, goods are being transferred to the buyer, and we are getting money in return for the same. Or if it is if it's a credit transaction, then in that case it's a kind of partial financial character, where the goods are sold, they have been transferred to the buyer, but we have not received the money. So but again, the condition is we are going to receive the money after a certain period of time, because we have sold the goods on credit. So that period could be 1 month, 15 days, 30 days, or it could be 6 months, whatever. It's the terms and conditions depending upon the buyer and seller mutual agreement. Okay, so that is what is financial character. And then towards the end, when we summarize everything, then after that we interpret the results thereof. So basically the purpose of interpretation is to get to know how we are performing financially, what is our level of profit, what is our level of operations, how much is our cost, how much is our profit, what is the value of our assets towards the end of the year. So all those things we get to know when we do accounting. So you understood? I hope you understood. See, we all know that this accounting, why it originated, because when we started trading and the number of transactions increase, as we have limitation of human memory, so we can't remember everything every time. In that case, we need to write down the things that are taking place, or the transactions that are taking place. And when we write them, if we do them all in a systematic manner, with proper steps followed, then at the end of the entire process, we get to know the final result, that how we performed financially during an accounting period of 1 year. Okay, now we move on to the next topic, the next subtopic, that is your advantages of accounting. So when we talk about it over here, advantages of accounting, um, how accounting is beneficial for us, or how it is going to be helpful for us. Okay, so the first advantage that we have for with accounting, the first advantage of accounting that we have is, um, yes. So the first advantage of accounting that we have is it provides information about financial performance, as I had already explained you, towards the end of the period, or maybe at the end of every month or every quarter, you can get to know how did you perform financially. So when I say perform financially, it means what was your level of profit, or what was your level of activity, volume of sales, or how much was your cost, how much was your profit margin. So all those things. So we basically need to know what is our profit or loss. The way you get report cards towards the end of the year, what is your performance academically, same way in every organization we do accounting to get to know that how did we perform financially, whether we had losses or whether we had profit from our financial transactions that have taken place during the accounting period. Okay, the second advantage that we have for accounting from accounting is accounting provides factual information about financial performances during a given period. Next. Yeah, so the second advantage that we have from accounting is it provides assistance to the management. So when I say assistance to the management, it means it helps the management in taking decisions. Those decisions could be related to uh, planning, organizing, or expansion, business expansion. It could be increasing the level of operations. It could be geographical expansions. So all those strategic decisions, they are quite helpful. All the strategic managers or the decision makers, they get a lot of help from financial accounting records, because there we get to know how much is our worth, how much is our net worth, how much we can reinvest. So all those things we get to know with the help of accounting records. And based on those accounting records, based on our financial performances, the management of the organization can decide upon uh, that what future decision they need to take up with respect to the organization's growth. Okay, so the next advantage that we have for accounting is it facilitates comparative study. So basically what we do is, when we get to know the profit or loss of our company for a particular year, then we can do a comparative study that how we are performing. The way you have in your schools, you have for each subject you have grading system like A grade, B grade, C grade, or A plus, C plus, B plus, whatever it is. Same way here also we can do a comparative study. So in this, when in case of organizations, when we do comparative study, we try to compare, we try to do comparisons based on intra company records and intercompany records. Okay, so when I say intra company, it means within the company. So it means the organization is comparing its own performance with its past performances. Okay, so that is called as intra comparative study, where the organizations do the comparison with their own past performances so that they can improve further later in future. Second category that of comparative performances is inter organizations or inter company comparative study, where one company tries to compare its performance with the other competitors in the market. Like Coca-Cola, if it is doing an intra company comparative study, then it will compare its performance of 2019 with its past performances of like the year 2018 or 2017 or the year 2010, whichever it is, whichever year in the past it is with the same company's records. But when the same Coca-Cola company is doing intercompany comparison, then in that case it is going to compare its performance with PepsiCo. Okay, so here you try to compare your own performances, your own profit with your competitors in the segment. Okay, yeah, the next advantage that you have of accounting is it helps in assessment in settlement of tax liabilities. Okay, so when I say settlement of tax liability, so we all know that whenever we earn or whenever organization earns profit at individual level, also if people earn profit beyond a certain level or income beyond a certain level, you need to be a responsible citizen and you have to pay taxes. Organizations or corporates are also uh, so, they also have their own responsibilities or uh, liabilities towards the government. So in case if they are earning profit, then in that case they have to pay tax to the government authorities, to the government departments, income tax department. So in this case, when we maintain accounts, when we do proper accounting, then we get to know exactly how much is our profit or what are our liabilities, like how much we need to pay income tax only when we know that how much is our income, then we will be able to assess that how much tax we need to pay or how much tax we are liable to pay. Similarly, the GST assessment also, the goods and services tax assessment or payment, this also can be done easily with the help of accounting. Okay, so these are the liabilities that could be paid off easily, or that could be paid off with the help of accounting records. When we know how much is our profit, when we know how much is our income, when we know how much is our sales or purchases, we can settle our income tax and GST both the ways. Okay, next. Next advantage that we have from accounting is it is helpful in raising loans. So if we maintain proper accounts every year on year basis, then it acts as an evidence, or it acts as a document that can be used when you want to raise finance from any kind of banking or financial institutions. So anywhere, anytime when you go for any kind of fundraising or loan or any kind of loans that an organization wants to take up from any bank or financial institution, then in that case they need to show their past 3 years accounting performances. They need to submit their accounting records, they need to submit their income tax payments. All those receipts need to be paid submitted with the banks. So once the bank assesses and checks your financial records and your income tax payments, and if it is satisfied, if the bank authorities are satisfied with your credibility, with your debt position, with your financial position which was depicted in your accounting records, then they will grant you loans. Okay, so basically it acts as a tool for getting loan through accounting proper documented sources. Okay, now lastly, it helps in decision making overall. When see, since accounting provides lot of useful information to the management, hence management can take short and long term decisions based on the data that is provided from accounting, that is provided through accounting. Okay, now we had till now we have understood, we have just I had explained to you about the various benefits or advantages of accounting, but as you know that everything has its own pros and cons. So here accounting also, apart from its advantages, there are certain limitations as well as associated with accounting, and we are going to cover them up one by one. So the first limitation of accounting that we have is accounting is not precise. Okay, it is, so when I say it is not precise, it means what you try to do is you try to do whatever has taken place. Whatever has taken place means if a transaction takes place, then you record it. So already that transaction has taken place, so it has become historic in nature. So we record the historical values of assets. So they are not accurate, they are not updated, they are not up they are not updated at present day's value. Sometimes they are most of the times they are historical in nature. Then apart from that, accounting also gets affected due to personal biasness and judgment sometimes. So at times the valuation methods that you adopt for different assets, like valuation of inventory or valuation of depreciation, under those categories sometimes the personal biasness do takes place and personal judgment affect the decision making. That's why we call accounting as it as accounting as not being precise, not being accurate, and it is affected by personal biasness and judgments. Okay, and then it ignores the effect of price level changes. As I told you in the first point, this point is also partially related to that only. So what we do is as I told you that we do historical recording. So whatever has taken place, whatever transaction has taken place, we are going to record it. We are not going to change any value, we are not going to change any money relating to it. So these are these statements, all the accounting statements, they are prepared on historical basis. So changes in the value of money, they are ignored. Okay, and even qualitative aspects of accounting or financial performances are ignored at times. And Since accounting records only monetary transactions, that also gives a reason that qualitative aspects in accounting are ignored. Qualitative aspects of financial performances are ignored at times. Okay. Now let me give you an example. So if you have purchased a building, suppose, and if the value of building appreciates, but as per our rules of accounting, we will record its value at the historical cost, or at the cost at which we acquired it. So that is acquisition cost. So we don't change the acquisition cost over a period of time. Okay, so that is where we don't get to know that what is the present value of that particular building. Now the next limitation that you have is accounting gets affected by window dressing. Sometimes people can manipulate data, they can change the figures to make the financial statements look more favorable. And this is mostly done in the case of at times when you want to have a potential, where when you want to have an investor in your company, at that time you want to show them the best thing by manipulating, and that's not actually right practice. But still, lot of times, lot of occasions, this window dressing affects the actual position. And through manipulated data, organizations show off. Okay, they try to show off that their financial position is quite strong. Okay, and then now we do the differences between bookkeeping and accounting. So bookkeeping, it's just a part of accounting, where what we try to do is we try to identify, measure, record, and classify the financial transactions. Okay, whereas in case of accounting, see, accounting is a broader concept, bookkeeping is just a part of it. So when I say accounting, it's a wider concept, and it actually begins where bookkeeping ends. So when you are done with bookkeeping, then your accounting actually starts, where you do summarizing, interpretation, communication, communicating the financial data to the users of financial statements through newspapers, through annual reports, through uh, company's own publications. So through those sources, you do the accounting process. And the next point of difference that you have between bookkeeping and accounting is, it is the bookkeeping is the primary stage of accounting, whereas when you talk about accounting as such, it is the second stage and begins where bookkeeping ends. Okay, so the stages of accounting, that's what I told you. The next point of difference is bookkeeping, it job is in routine and repetitive in nature. Every day you do the same thing, transactions taking place, you do the recording, you identify whether they are financial or non-financial, do the recording, pass the journal entries, transfer them to ledgers, and then prepare trial balance. So they are all routine transactions, routine in nature, there is no change. Whereas accounting job is analytical in nature. Here you need to analyze the things, and whenever you analyze the things, they are not routine, they are never repetitive in nature, they will always vary depending upon the present situation, financial situation. Okay, the next point of difference that we have between bookkeeping and accounting is, the main aim of bookkeeping is to maintain systematic records of financial transactions, whereas the main aim of accounting is to ascertain the profitability, the profit earning ability of an organization, and the financial position of the business, whether its financial position is strong, weak, medium, or how they can improve it further. All those are considered as a part of accounting. Okay, the next point of difference that we have is, bookkeeping does not require special skills, and it is normally done by a junior staff, whereas for accounting you need to have specialized skills. So you have CPAs, certified public accountants, you have CAs, chartered accountants, who provide proper accounting services, and there they provide consultation, and they need to have specialized skills to analyze, and it is performed by senior staff. That is all from my end, and thank you students for being with me. I request all of you to please share, subscribe, and like this video. Thank you everyone once again.